just be a bit of a sponge. Ask questions to as many people as you can. Read
Yeah.
books, watch podcasts. Hello,
Yep.
and most importantly, which is the best thing that Christy and I did was to get a mentor,
Yeah.
because a mentor has done it
Yep.
and a mentor is doing it, and
Yep.
they've been through every worst case scenario you can imagine,
Yep.
and they can hold your hand through it. So when we
Yeah.
got Carolyn as our mentor, it just completely changed everything for us, and it made it so much easier.
You're listening to Property Investor Tales, stories from the front yard.
Hello and welcome to Property Investor Tales, stories from the front yard, where I get to speak to property investors from around Australia about their investing journey. My name's Tabitha Bright and I'm the head of the advising team here at Positive Real Estate, where we help people build wealth through property. With over 8,000 clients between Australia and New Zealand, there are some incredible stories to tell, which hopefully make your investing journey that little bit easier and will inspire you along the way. So my guest today is Bob Provan, and today we talk about what motivated Bob to invest, what his goals are, his resilience in the face of disappointment and challenges on his very first purchase, and how he has since gone on to acquire 3 investment properties in 3 years. Enjoy this conversation with Bob. Hey everybody, and welcome to Property Investor Tales, stories from the front yard. I'm hosting today. My name's Tabitha Bright. I'm head of the coaching and advising team here at Positive Real Estate. And I have a special guest with us today, Bob. So Bob, welcome to the podcast.
Thanks for having me, Tab. Very excited.
We are too. And Bob's been with Positive Real Estate for 2 years, and he has been investing for 3 years. Bob has done a number of investment purchases over that time, so we're going to talk a little bit about that. And as you guys would know, we get people from all different experiences, different time frames, different journeys to talk through their investing, because everybody's got their own lessons, whether they've been investing for a short time or investing for a long time. And so today, Bob is one of our, what we would call our newer clients, even at 2 years. Some of our clients have been with us for, 15 years plus, which is really awesome. But Bob's a relatively new client, so he's going to talk us through some of his experiences with investing, what drove him to engage Positive Real Estate for some education and support on the investing journey, what he has done and what his goals are, what he's aiming for. Because at the end of the day, property is a vehicle. Property is a vehicle to get us a result. And sometimes we become focused on how many properties or being a property investor, but ultimately it's to give us choice. And so we're going to talk a little bit about what Bob's doing it for, because I'm always curious as to the why. Don't mix up, first tip for the day, don't mix up the how with the why. And so today we're going to talk to Bob. So Bob, so I don't keep waxing lyrical and turn this into a monologue, tell us a little bit about you. You've been investing for 3 years.
Yes, I've been investing for 3 years. I'm 35 at the moment. I'm married for,
Oh,
I'm going to say 2 years, close to 2 years, I
ooh,
think.
Christy.
2 years. Um, I have a 12-year-old daughter from a previous relationship.
Fabulous.
Um, yes, she's beautiful. We love her so much. She actually talks to Christy more than she talks to me, but that's fine. If they want to be besties, that's cool with me. Um, I'm an electrician.
Oh,
I live
yes.
in Mildura, which is right up the top left-hand side of Victoria, near
Yep.
absolutely nothing. Um, so yeah, I really love being up here. What
Yep.
else about me? I love football and I love property. Really, they're my two things outside of work that I love. Yeah.
Yeah, and I think the thing that has really engaged me with yourself is just how passionate you are about everything. And it's really nice to see when somebody has that passionate energy because, when we're doing something and focused on something that we love, it just makes it that much easier to maintain that momentum, which is why we do focus a lot on goals because not everyone enjoys all of the property journey. You know, there can be lumps and bumps. There can be moments of boredom. There can be frustration. Sometimes you're dealing with property managers and all the crappy stuff that goes along with, you know, anything to do with investing, I guess, and particularly property, because people are involved. And if we focus on the goals, that's often a good way to keep motivated, because the journey with property is a decent time frame. It's, you know, we are looking at 10 to 12 to 15, sometimes even 20 years, depending on where you start in your journey. And Bob, when you said you were 35, I was like, oh yeah, you're young, but you're not young, because we have clients that are 20, and I don't mean that as any kind of offensive comment.
That's fine.
But then, oh no, it's going to backfire, because then I realised my daughter's 34, right? So I could technically be your mum, which is just one of the little monologues I'm going through in my head. But it is interesting, because I started investing in my 20s, which means if I'm 56, that's 30 odd years of investing. And it's fascinating seeing what can happen to your portfolio over that time. And I'm going to be really interested to know, because I'm going to put my own 2 cents worth, can you remind me, at the end of this, as to what my big lesson of 30 years of investing in property looks like. Yep, good. I like to see a man that takes notes. That's awesome. But let's talk a little bit about your goals. What's driving you on this property journey?
Yeah, so our goals, we sat down with our mentor, Carolyn, who we met through Positive, who's been absolutely fantastic, a godsend.
Awesome.
So we did our goals with Carolyn, and we want to have $5 million worth of property, which will then generate $250,000 worth of passive income per year.
Nice.
Which then means I don't have to go to work. Which is great. I don't have to be an electrician anymore. I've done it for 20 years and I'm already sick of it. But it'll always it'll give us the freedom that we want to be able to spend a lot more time with our kids and, you know, coach their football teams or netball teams or volleyball teams or whatever teams. Just be there and watch them smile and watch them run up and down the court, not even touch the ball. It's fine, but just to be there and be present. You know, we want to be part of those moments. So yeah, that's why we want it.
Oh, that's fabulous. And just for the people that aren't clients of Positive Real Estate at the moment, one of the important processes we go through when a client joins mentoring and our education, our lifetime mentoring program, is we quantify what it is you're actually going to need in order to have the lifestyle you want. So Bob's gone through an exercise with Carolyn, who's one of the coaches on the team. And we have 12 coaches here at Positive Real Estate as our kind of standard base number of coaches to look after our clients. And Carolyn's one of our coaches that has certainly been around for a very long time, nearly as long as me in the business. I think she's around the 15 years coaching, which, makes her an expert. It's awesome. And so Carolyn's gone through Bob and Christy's goals, and they've put a number next to the stuff that's important. So we work out your needs, your wants, your dreams, and what those are going to cost. Then we take that number and we put it through an equation that will come up with the value of property that Bob and Christy need in order to create the rental income for his lifestyle. And sometimes we'll have what we call a BHAG. I'm sure many of you have heard that term, a big, hairy, audacious goal, which is Bob's 250, right? It might be that along the journey, Bob is 12 years in and his portfolio is mature enough to give him some choices. He doesn't have to wait for the 250K. He might, because that might be a 20-year journey, but I've had clients that have chosen to take a year off or to work part-time or to take a chunk of cash out of their portfolio and put that towards a dream trip or something that's really important to them. It's also meant that when people have had life challenges like sick partners, they've needed to go back home for something when they've got family overseas, or they've needed to help a family member out in some way, that there are choices, because it's not always about the exciting goal. It's about having those lifestyle choices that are so important. So Christy and Bob have a wonderful goal that's motivating them. You can see Bob's very positive about that, which is fantastic. And his goals mean that he needs $5 million in investment property. And then the catch on that is that in order to live off the rental income, that $5 million needs to be debt free. So how do we create that? And that's what the team here at Positive Real Estate work with our clients on. The first step is our acquisitions phase, where we focus on buying the amount of property and getting that into your portfolio. And at the moment, there's challenges around that, right, Bob? There's stuff like servicing, deposit funds. Not many people can just go out and buy $5 million worth of property. Yeah.
There's spontaneous trips to Greece that I didn't. I didn't even get invited. Christy went on her own with her best friend. I know. So I was like, oh, that's going to push us back a little bit, but okay. Yep.
So you've managed a spontaneous trip to Greece in the budget, as well as tell us about your portfolio, because you've got your personal place of residence, you've got some deals on the go.
We do. So we bought our primary place of residence. Oh, there we go. Look at that. Knocked that over. Primary place of residence here in Mildura in September 2020.
Yes.
So, that was pretty cool, pretty exciting. There was a lot happening then, but it was really exciting.
Yeah.
Christy had never seen the property. I was working in Mildura and she was in Melbourne studying, and I said, this is really good property, we should buy it. And she's like, okay. So I just took her through on a video, and that was her vision of it. So we bought that and we lived there for maybe 12 months, and a work colleague of mine said, oh, what are you going to do with the equity that you've got in your property now? And I said, what is equity? What are you talking about?
Got it.
Yeah. And he said, well, the property in Mildura has gone up a lot. You should get your house revalued and you can use your equity and you could buy another house. And I was like, no, I can't. Looked into it. And so our house had gone up, I think it was $110,000 in 11 months. Ooh. So I know. So I was like, whoa. So I read a book called My 4-Year-Old the Property Investor, which was fantastic. It was like, okay, I'm about 5 years old, so this makes sense to me. Then I read Robert Kiyosaki's Rich Dad Poor Dad.
Nice.
Yeah, and I was like, okay, here we go. Assets.
Gloves off.
Cool. Yeah. So we tried to get another property. It took a while, but we got another one over in WA. There was a lot of hiccups and stuff with that, but we can get to that a little bit later if you like.
Yeah.
So we did a house and land package over in WA there. That's now being rented out. That's also gone up in value, but the Mildura property also went up in value again. So we thought, let's release that equity and maybe try and get another one. And we're doing that with Positive Real Estate. We've also decided to move out of the primary place of residence, and we're living with Christy's dad in a big 4-bedroom house, rent-free. Fantastic. And we're renting out. Yeah, and now we're renting out the Mildura one as well. So that's,
wow.
Yeah.
Wow.
Busy. There's a lot going on. Heaps.
So in 3 years, what I'm hearing is you've essentially purchased 3 properties. I know one is still on the go at the moment, but I still count that. You're committed. You are unconditional.
Yeah.
You don't have a choice whether you purchase it. Like it's going to be yours.
We have to purchase it now. Yeah. So yeah.
Yeah. So you have 3 properties in 3 years, which is pretty phenomenal at 35.
Yes.
And how old's Christy?
Christy is 27.
If you don't mind me asking.
27. No, she's 27. She's 27. So
yeah. Wow.
Yeah,
so
we're
you
doing
guys
pretty well. We're pretty happy. Yeah.
That is amazing. And when you think about it, like your whatever the percentage is of the property market, you'll be less than 1% of the property market. You'll be in our 1% club.
Yes, as soon as the that third property settles, we will be having some champers and calling ourselves 1%ers for sure.
You're 1%ers now, bud.
All right, yeah, I'll get some champers tonight. Then I'll surprise her.
Absolutely. Like, make hay while the sun shines. We don't have to worry about perfection and it being absolutely correct. It's like you're committed. Like, there's no backing out. You can't be kind of pregnant. You can't be kind of engaged in a property.
Yep, that's fair. That's fair. So yeah, I don't do things by halves. If I'm going to do something, I'm all in and I'm doing it. So we're going hard. Yeah.
champagne tonight. I'm going to hold you to that. So with that $5 million, we know that that will equate to gross, and we're talking big numbers here. So, and when I say big numbers, I mean the gross numbers. We're not going into the weeds, as Jason would say, and going, well, out of that 250, you're going to have to pay a property manager X percent. You're going to have to, that's a given. We start with the big numbers, the broad spectrum numbers, because it gives us something to hunt for, to look for, to go for. Because if we make it too detailed and you get bogged down in the hows, then you never start. So we have a big goal, and then the point of the lifetime education is that you're coming back and you're reassessing your situation and you're redoing your numbers and you're replotting what's important to you over the next 10, 15, 20 years. Do you think it's feasible that Bob and Christy's goals will change? Because I know mine did. Mine simplified massively. I used to do vision boards, and I'd have them printed out at the local digital printer in big format so that I'd put it up on my wall and it'd be full colour photographs. I'd do it all in Photoshop. I'd have the fancy houses around the world, the flash cars, the blah-de-blah. And over time, I worked out as I got older what was most important to me, and those vision boards started to reduce in their complexity, but also along the journey, you tick stuff off, right? So some of the stuff that you want to do, are you coaching sport already?
Yeah, I am a coach at the moment, so yeah. Yeah.
So you're already doing some of your goals, right?
Yeah.
And so you tick more stuff off and new stuff comes up. And so sometimes even the numbers can change. So we don't want perfection to get in the way of Bob moving forward and having a target to aim for, I guess is the point I'm trying to say. So we're aiming for that 250. Out of that, you're going to pay tax on it. You're going to pay expenses, property management, and so forth. But it's a starting point and it's a goal to go for, which is awesome. And I heard you say, I made a little note down here while I'm looking down as I've got my my notes on Bob. I heard you say something about a WA hiccup. Talk us through that.
Yeah. Oh, there was a lot of hiccups there. So we, I guess, enlisted the services of a different company.
Oh, okay. Yep.
Yeah, and we tried to get a property in southeast Queensland, and they took a long time to do paperwork, and that fell through, and then we got priced out of that market. So then we went over to WA, and once again, their paperwork took a long time, and we missed a date for getting some paperwork lodged. So then we got an extension, and then they missed the extension, and then we missed that block and that property, and then they found another one in WA, and we finally got in there with that one. So the whole process of trying to get a property took from August 2021, and then it got built and everything by the end of July 2024.
Oh, wow.
So it was a long, yeah. So it took 3 years to try and get that second one because of a lot of other things that were outside of our control and all that kind of stuff. And that was what brought us to positive, is we wanted some stability and a bit better of better experience. And it's already been better, and we got a property within, a year after.
Oh, fantastic!
So it was really, really painful experience, but we pushed through. We got it done, and we moved on from them, and we've enlisted the services of Positive Real Estate, and it's been so good, so smooth. I didn't think it.
Nice
I was worried about it being difficult again, but it's just been so good, and it's way better.
Touch some wood for me, because sometimes, like you said, there's stuff outside our control. And I just want to talk about a couple of things here that come sort of to the surface in your story there. So the first thing is that could Bob have given up?
Yeah, I definitely could.
I've met a lot of people over this journey that have had a bad experience, and in the back of their head, the fear around investing is playing, and then they have a experience that may not upset or challenge an experienced investor in the same way. But when you're starting out, it's like being a teenager all over again, or 4-year-old as per that book, a teenager again. And so everything is new as an experience, and you have to build up that that investing muscle. And so it's really easy to throw your toys and say, oh yeah, look, I knew it was going to be a problem. I knew there was a reason that I was not, sold on investing. And a lot of people give up at this point. And that's why we see so few people with 3 or more properties, and we call it the 1% club, because you're dealing with a lot of money, you're dealing with a lot of people in the equation. And so it can be scary, the mistakes can be costly, and it can and if you get it wrong, it can really impact your day-to-day lifestyle with your expenses and so forth. So how did you navigate that mentally? How did you and Christy deal with the disappointment?
It was really frustrating at the time. Like every single
Yep.
time something happened, we were really frustrated because it was out of our control. We'd done everything that we needed to, but I guess because I'd read those books and we decided that we wanted to invest, that we just keep sticking it out and be like, all right, no, that's fine. What do we need to do now to get it done again? We
Yep.
need to do this. All right, that's cool. Did that. And so Christy and I are very open and very honest with each other at all times. So if I'm
Great.
a bit upset or depressed, I'm like, hey, I'm not feeling great. And she's like, all right, what's up? What do you need? And it was, I'm thinking about this property. And she'd be like, it's all right. It'll get done. Have
Yep.
faith. We'll
Yep.
be fine. And then other days she's be like, oh, I'm worried about this. I'm like, no, it's all cool. Trust me. Like, it's going to be great. I reckon we're sweet. It's all good. We'll push through. It'll work out in the end. It's going to be hard now. If it was easy, everyone would do it.
Everyone would do it. Yep.
And I was like, okay, this is what people are talking about. It's hard, but I can deal with this. Let's push through. So we just
Yep.
sort of stuck together, really.
Great. Perfect. And one of the things that we always like to make sure people have is safety buffers and your plan B, right? So if you're going into a property deal and it's something that you're a little bit uncomfortable about, like a lot of people have stories around off the plan. Off the plan's a strategy like anything, and there's a right time and a wrong time for it, and there's pros and cons. One of my biggest things I like to pre-frame with clients is that there's only upside or trade-off. If you think about property deals and property investing and that kind of terminology, it's not about, is this the right property? Is this the right strategy? And you will have your own measuring stick as to what you will accept as a trade-off, because even if it's the best deal in the world, there will still be a trade-off. And
Yep.
the best deal for Bob may not be the best deal for me, and vice versa. And what I mean by that, as an example, is say Bob was earning $500,000 a year. Woohoo, Bob! You're kicking some goals. People realised how awesome Bob was, and some multi-millionaire decided to pay him $500,000 a year. And I was working hard in a cafe, and I was earning $60,000 a year. Bob might have a deal that has, a massive discount in it, but it's going to be quite negatively geared, but there's massive upside in it. That would be awesome for Bob because he needs the tax deductions. But for me on $60,000, I couldn't afford to hold the property. And so what's good for one person is not necessarily good for another. And that's why I don't like saying this is a good deal. I like saying this is a deal that suits your strategy and your situation right now. And it is a deal that will help you get closer to your goal because it's going to get some good capital growth for you, Bob, and it's in an area where there's some good rental growth. So we're getting that income up for you. But these are the trade-offs. Are you comfortable with those trade-offs? It's an off the plan. So you are unconditional and you have to settle it no matter what, even if your situation changes in 2 years. That's a trade-off. Could the valuation go up, but equally could it go down, and do we control that? No. So that's a trade-off you've got to be okay with. But there might be upside, like it's a highly sought-after developer. You're getting in at a price that you can't buy in the established market. And so there can be things that make deals good or bad that will be right for you. And I think that's really important to understand when we're looking at an investing strategy. And so for Bob, what was the strategy that you had with the WA property? Was it house and land, did I hear you say?
Yeah, it was a house and land in an area that, like, I'd done a lot of my own homework, and I suggested to them we invest there. That I
Oh,
felt had a lot of it. Yeah, I know. That's how good they were. That I felt there was a lot of area, like a lot of potential for growth, because we needed
mm,
growth to then be able to get the next one to release equity to buy another property. We didn't really need the cash flow per se because I'm on a pretty good income, and so is Christy. We needed the growth. So
got it.
serviceability was going to be fine, but we needed that extra lump of a deposit. So we invested over there, and it's done amazingly, and it's gone up in value, and we'll be able to use that soon. But yeah, like you
Fabulous.
said, it was what we needed was growth, so we looked for growth.
Brilliant.
Yeah,
And then as you go through your acquisitions phase and you start to acquire properties, so if Bob's buying properties at, say he was buying them at 1 million each, he'd need 5 properties, right? If he's not comfortable or he doesn't service for that, he might be buying at 6, 7, 800,000. So then he'll need more properties to hit that 5 million. And then, even though Bob doesn't need servicing now, is he going to need servicing later to keep him being able to purchase the amount of property he needs to get that income? And so there's always this, which lever are you pulling and what's most important? We need tax deductions for you, but finance is a real tough ask at the moment in the market. It will ease, there will be solutions, something will happen that will change the market, and it will kick off again because markets are cyclical and they expand and contract, right? And at the moment, the finance is the toughest part of investing at the moment. And so we might then be focused on if Bob goes from acquisitions to consolidation because he can't purchase right now because the servicing doesn't extend, then we have to now look at what do we need to do? What is the problem we need to solve to move Bob forward? Are we going to get his rents up and make sure all his rents are market rent? Can Bob get a increase on his pay? Can Christy get an increase? Are you prepared to move home and live with Christy's dad or your dad? I can't remember.
exactly. Yeah,
Yeah.
Christy's dad. So that's all like, yep, we can save some money here. Let's do that. No worries.
Awesome. Yep. And so, what are you prepared to do to get a result out of the norm of Australia? Because sometimes there is no magic wand, but it's about the 1%. We chip away, we get the income up, we get the rents up, we get, we wait for the market to deliver some leverage, interest rate cuts, or a rise in market value. Bob goes crazy and moves back in with Christy's dad. Doesn't have to pay rent, so that helps
Nope.
his serviceability.
Right.
Can save.
Yeah.
Yep. And often with clients, I'll say to them, just give me 2 years of knuckling down and no trips to Greece. So tell me how that happened.
How'd that happen? Well, her best friend is from Greece, like she's Greek. And her family was going back there for a holiday. They've got some property over there, so she's like, I can go there and stay at their house for free. Like, I'm just going to pay for flights and stuff. And I said, look, if you want to go, that's fine. Go. I'm not your boss. You're your own boss. You do you, boo. And
Oh,
so, yeah, off she went. She went for a month. Had a great time. Her dad and I just hung out, bachelor in it, eating microwave meals because our cook was gone, but that's fine. Um, yeah, so she had a great time of her life, and I think if we weren't living with her dad at the time, we wouldn't have been able to afford for her to do it because we would have been servicing our mortgage and the
doing
other
all of that
properties and
stuff.
saving and doing everything. So, that did give us a little bit of freedom because we were
That's
willing
awesome.
to sacrifice something. We
Yeah.
were also willing to be able to get something, and now we're still on track now with all of our savings and everything, thanks to Christy's dad and everything. So it's great.
Oh, that's awesome. That's awesome. And parents love being able to help out generally. I can speak from my own experience generally.
Normally, yeah, no, he's good.
Yeah, I love my daughter, and she'd kill me for even talking about her on a podcast. So I have to be very mindful of that. But no, she's fabulous. But occasionally she does try to iron on my stone bench top, which I'm not very happy about, and I'm yet to talk to her about. So Amber, you're on notice. Um, Alrighty. And so when you were finding yourself priced out of the market, tell me a little bit about that because that was when Queensland prices were beginning to really escalate, was it?
Yeah, so they were just taken off, and they were about $430,000, and we were like, oh, gee, can't afford that. That's yeah, when we sort of just could. So we're like, all right, and then the blocks of land went up to 400, and it was going to be 450, and we're like, can't do it. Ugh. So we were pretty depressed for 2 months, I'll be honest. We're like,
Oh,
oh, we've missed out. Oh, what are we going to do? And the company didn't really say anything. So I was like, I'll find out what we'll do. I'll find somewhere else that we can afford, somewhere that's still going to maybe get us some growth. And I thought to myself, I was like, look, we can either try and get in the market now, or it's only going to go up. So we might as well try and get in where we can now so that we don't miss out entirely. So it was very stressful, but at the same time, it was a bit of a lesson because we realized just because we can't afford that area doesn't mean we can't afford every area. So we had to find where was going to suit our serviceability, where was going to suit like our risk management as well, like how risky we were prepared to go with things. So it
yep,
was, and everyone's different, as you know. So it
yep.
was stressful, but we just decided it's what we want to do. So we will just find a way. Yeah.
Perfect, perfect, perfect. Because sometimes we have had to have those conversations with clients, and it's a tricky conversation to have where you're saying to a client, we're here to tell you what's happening in the market. And right now, if you don't move, you are going to get priced out. But equally so, it's a tricky conversation for us to have because we don't want people to feel like we're pressure selling them something. And so this is where trust in a relationship is really important with the people that we coach. And part of the reason that we have a lifetime education program is that you can build that relationship and that trust over that time, so that when there is an opportunity but people have to move quick, which can be, not always, but can be a reality in the market, then they know that they can rely on that information and take action really quickly. From what I heard, though, there was some challenges around other parties doing
Other
the
things.
paperwork and moving at a
Yeah.
pace that was going to work. Yeah.
Yeah,
Okay.
but in saying that, when we became members at Positive, we were with Carolyn and we wanted to move on a property, and she said to us, "I don't think you're ready. I don't think
Great.
you'll be able to service it. I don't think it's a good idea." She said, "I'm not going to tell you not to. I'm just telling you I don't think it's a good idea." We sort of went, "Oh, okay." We had a look. We looked at it, and thought, "Okay, yeah, no, maybe she is right." And guess what? She was right. We weren't ready, and it wouldn't have worked out, and we
Great.
would have set ourselves back a couple of years. So we waited. She said,
Awesome.
knuckle down for 6 months. So we knuckled
Yep.
down 6 months, and then she came to us with another opportunity and said, "Hey, I don't know if you guys have noticed, but guess what? You're ready. Here's an opportunity." And we were like, "Yeah, awesome. Thank you so much. Let's go for it." And so that
Yeah.
was like, it was really good to have that from Carolyn, to be like, "No, I don't think you are," and then to come back and say, "Well done. You did what I asked you to do. And now here you go." So that
Oh,
was
that's
so rewarding and
fantastic to
so
hear.
happy when that happened. Yeah.
Yeah. Yeah. Because we do have that, especially some of the deals, as you would know, like you see some of the Tim Gurner one as an example in Melbourne that was just nuts. And some of the other property deals can be incredibly persuasive. Like we're all guilty as the team of putting our putting our hands up, saying, "Oh, one of those. Oh, one of those. Oh, no, actually, no.
And
Sorry,
then
I
you're
was
like,
just getting carried away." I think Riley McNee, who's one of our head acquisitions team members, is about fit to kill me right now because I keep bouncing around on property deals. I've got to buy one more at the moment. He's going to kill me, I think. So Riley, big kiss to you, Dale. I'll sort myself out in a moment. Never try to coach yourself. Always get somebody else to coach you. It's you
yeah,
can talk yourself through and rationalize stuff, but I do find it very helpful having somebody else that you trust giving you some good advice.
yeah.
So that's a note to self. I'll talk to one of the coaches about what I need to do. Alrighty. So anything else that you wanted to add about your journey, that somebody that was looking to get started and was feeling a bit lost, feeling like they didn't know what information they can trust, where they should buy, what they should buy, what would you say to somebody like that?
What would I'd say, just be a bit of a sponge. Ask questions to as many people as you can. Read
Yeah.
books, watch podcasts. Hello.
Yeah.
And most importantly, which is the best thing that Christy and I did, was to get a mentor,
Yeah.
because a mentor has done it
Yep.
and a mentor is doing it, and
Yep.
they've been through every worst case scenario you can imagine,
Yep.
and they can hold your hand through it. So when we
Yeah.
got Carolyn as our mentor, it just completely changed everything for us, and it made it so much easier. I could send her a text or an email, or we'd book in a chat and ask her some questions that I might have or some queries, and she can answer it, and then I can go back to sleep because I'm stressing about it, sort of thing, you know. So it's
Yeah.
that for me is probably the best bit of advice I could give around
Yep.
that kind of area is to get a mentor because
Yep.
they just want to help you.
Yeah. Yeah. And the coaches are very motivated by that. The one of the standards we have when we're hiring coaches is that they have to be investing. None of our coaches are people that haven't invested, and we're really regimented on that because if you're going to obviously coach and guide people in investment, you have to be doing it. So all of our coaches are active investors. There was one more thing I wanted to say about that, and now it's just completely gone out of my mind. See, this is why I make notes.
That's it, good.
Oh, that's right. And I was going to say, if Carolyn, because not one person knows everything, right? I certainly don't. Carolyn won't. But collectively, we have 160 team across Manila, Australia, New Zealand. We've even got team in South America. And across all of those people that are investing and entrenched in property, there is always somebody that will know the answer or can get the answer. And I think that's what makes the resources at Positive so incredibly valuable, is that ability to get the answer no matter what. Because, you know,
Yeah,
we've
well,
been...
you get the 6-star team, you know, at Positive, and there's accountants, there's everyone. It's not just your coach. There's everyone that can help you in this big,
There actually
fascinating
is.
world of property. So yeah.
There actually is. And, you know, usually I don't want the podcast to feel like I'm selling Positive Real Estate. I do genuinely want it to be a, just something of interest for people to listen and learn. But I do think it is. It's an important differentiator with Positive, with a lot of what's in the market. And that, in our experience, between myself, Jason, and Sam, you know, there's well over 100 years of investing between all three of us. And for Positive itself, it's, you know, well over 20 years, 22, 23 years that we've been active in the market, teaching people. And that's teaching people through really tough times, through GFC, through COVID, through all sorts of market fluctuations. And it's that experience, I think, that is so valuable. Yeah.
Yeah.
So, my last and final question for you. We
Yeah.
go back in time, and Bob today was to meet young Bob. You can pick the age, whatever was kind of a fundamental time for you, be it 18, 15, 20. You needed to give Bob some important advice. What would you say to young Bob?
I'd probably go to 20-year-old Bob who's at the pub. Yeah, I'd tap him on the shoulder and say, "Get out of the pub, mate, because you need to save your money and invest in property. Because the best time to invest in property was yesterday. So you're wasting your time. Hurry up."
Very good. Very,
Yeah.
very good.
What about your lesson? You said we'd come to your lesson.
Yes, I hadn't forgotten, but very
Okay, cool.
good. I like the fact that you reminded me. It was exactly the same. A good friend of mine used to always say to me, "When is now a good time, Tab?" And and I take that very much to heart. When is now a good time? Like, if you haven't done it yesterday, do it today, because, you know, time is ticking. And while sometimes it can feel like we have a lot of time, we just don't know. And you want to be able to experience and have choices, and be able to support family, you know, and friends in tough times. And I have found that there is nothing like property to enable us to have those choices. So get stuck in as early as you can. And if you have left it late on the table and you feel like maybe it's too late, it's never too late to have a result. It might not be that you can go and buy $5 million worth of property because you're 55 and you're just getting started, but can you make a difference to your financial trajectory over the next 10, 15 years? 100% you can. It's never too late. Awesome.
Yes.
All right. Anything else to add, Bob?
No, nothing for now. All good, all done for me. Yeah.
Well, thank you so much for being on today's podcast. I know people will have got a lot from it, and it's really nice to have your enthusiasm and energy. It's really been awesome talking to you today. So thank you so much.
Thanks for having me, Tab.
Okay, see you guys for now. Hey, thanks for listening to Property Investor Tales. Remember to subscribe so you get notified every time a new episode drops. As you can guess, I love hearing people's property investor tales. So if you'd like to share yours, then please get in touch with me via email at propertyinvestortales@positivementor.com.au. We would also love your feedback, and I would appreciate a 5-star review over on Apple Podcasts or Spotify. Remember, you can watch all of these podcasts over on YouTube at Positive Mentor or at positivementor.com.au. Until then, take care, happy investing, and bye for now.